Welcome to Value Vest Daily. Look, the unfortunate truth is that our world is a pretty unstable place, and because of that, the way wars are fought is changing at lightning speed. We're in the middle of this massive revolution, moving away from soldiers on the ground to autonomous, unmanned systems, all run by artificial intelligence. So today, we're going to unpack what this huge shift means, not as a political debate, but as a massive opportunity for investors. We're going to look at 5 key companies and build a very specific playbook to navigate this new world.
All right, so here's our game plan. We'll kick things off with the new rules of war and what's happening in the market. Then we'll introduce our 5 champions and break down something I call the Barbell Strategy. We'll look at why it worked in the past and what it could do in the future. And we'll wrap it all up with a clear action plan for you.
So the whole idea behind our strategy today boils down to this one term, algorithmic warfare. And no, this isn't some sci-fi movie concept anymore. This is the reality on the ground right now. We're talking about a shift from humans making split-second decisions to intelligent machines that can see, think, and act faster than any person ever could. This disruption is forging a new generation of dominant companies and, for us, new investment opportunities.
Okay, so this right here is the central puzzle for anyone trying to invest in defense today. The whole sector has basically split in 2. On one side, you've got these super exciting, high-growth tech companies that are priced to the moon. And on the other, you have the old guard, the established value-priced giants. So the big question is, how do you invest in both the future and the present? Well, that's exactly what our strategy is designed to do.
First up, let's meet one of our champions, Palantir. The best way to think about them is like this. All the drones, satellites, and fancy new hardware, that's just the body. It's kind of useless without a brain. Well, Palantir is building that brain. It's the AI operating system that takes a tidal wave of data and turns it into smart, actionable decisions on the battlefield.
And you can just see the market's excitement in these numbers. A market cap around $462 billion, 63% year-over-year growth, that's huge. But whoa, look at that PE ratio, 413. That tells you the market is pricing these guys for absolute total perfection. Now, other metrics like return on equity are still pretty low, but investors are making a massive bet that Palantir's AI platform, driven by big wins like Project Titan, will become the default software for the entire US military and its allies.
Okay, on to our next disruptor, Kratos. The US Air Force has a really expensive problem. You can't afford to lose an $80 million fighter jet. So what's the solution? Kratos. They build cheap, fast, and what they call attributable jet drones. That's just a fancy word for, it's okay if you lose it. These are the loyal wingmen designed to fly right alongside an F-35 and take all the risks.
And again, this valuation tells the whole story. A PE ratio of 675 is pure, unfiltered speculation. You can see the fundamentals just aren't there yet. Return on equity is still negative. The market is not looking at what Kratos is earning today. It's betting everything on a future where the government orders their XQ-58A Valkyrie drone not by the dozen, but by the thousands. It is a huge bet on where air combat is headed.
Our third disruptor is a company called AeroVironment, ticker AVAV. Now, the war in Ukraine has proven that these small, one-way kamikaze drones are absolutely essential on the modern battlefield. And in that category, AeroVironment is the undisputed champ in the United States. Now, they aren't in our core barbell strategy today, but you absolutely have to understand who they are and what they do.
So what makes them the leader? Well, first, their Switchblade drones have this unique wave-off feature. That means an operator can literally call off the attack at the last second, which is a massive differentiator. Second, just look at that catalyst. A nearly $1 billion contract with the US Army. That's serious business. They're also perfectly set up to be a big winner from the Pentagon's new Replicator initiative, which is all about fielding thousands of these autonomous systems. Okay, let's switch gears from the high-growth disruptors to the value side of the equation. Meet Northrop Grumman. Yeah, everybody knows them for the B-21 stealth bomber, but their real edge is in the much quieter world of autonomous surveillance. These are the guys building the systems that watch our adversaries from the highest reaches of the atmosphere to the deepest parts of the ocean. It's a true high-tech value play.
And these numbers just scream stability. A PE of around 21 is incredibly reasonable, especially when you're looking at 10 to 12% earnings growth. Unlike the disruptors, Northrop is a cash flow machine with a really strong return on equity. And the tech to watch here is the Manta Ray. It's a massive underwater drone that can literally go to sleep on the ocean floor for months. That is a total game changer for naval power, and it really anchors Northrop's place as a key innovator.
And finally, we get to the anchor of our portfolio, Lockheed Martin. If all these startups are building the exciting new gadgets and drones, Lockheed is the quarterback that brings it all together into one team. They build the F-35, which is the command center, the cockpit, that will one day be directing entire swarms of these robotic wingmen. They are the safe harbor in this entire strategy.
And this slide just confirms their role as the foundation. You've got a solid PE, steady earnings growth, and a balance sheet that's basically a fortress, with amazing free cash flow and a high return on equity. Let's be clear, you're not buying Lockheed for crazy explosive growth. You're buying it for stability, for income, and for its central role in plugging all this new AI and drone tech into the most advanced fighter jet on the planet.
So how do we combine these two completely different worlds? We do it with the barbell strategy. It's super simple but incredibly powerful. We're going to take 4 of our champions and allocate 70% of our money to the stable giants. That's Lockheed and Northrop. This is our anchor. Then we put the other 30% into our high-octane growth disruptors, Palantir and Kratos. That's our rocket fuel. It's designed to give us the best of both worlds.
So, the big question is, does it actually work? Well, here's the proof. We ran a simulation for 2025 with a hypothetical $10,000 investment. The $7,000 in our stability bucket did its job beautifully, growing a very respectable 13.4%. But the growth bucket? Oh, that's where the magic happened. Our $3,000 investment just exploded, up 184%, turning into more than $8,500.
So what was the total portfolio return for 2025? A stunning 64.8%. The strategy worked exactly like it was supposed to. Our stability bucket protected our capital, while that small growth bucket delivered absolutely massive, outsized returns. It's the perfect example of how the tail can wag the dog, where just 30% of your money can drive the vast majority of your profits.
Okay, so that was the past. But what about the future? Let's talk projections. We took the consensus growth estimates from Wall Street analysts for each of these companies, and this table shows how that same $10,000 investment could potentially grow over the next 5 years. You can really see the steady compounding effect building up, year after year.
And if you're a visual person, this bar chart really tells the story. An initial $10,000 investment in 2026 is projected to more than double, hitting over $20,000 by the end of 2030. That's a potential total return of over 102%, which works out to about 15% per year based on what analysts are forecasting right now.
Of course, a strategy is only good if you can act on it. So this slide gives you some potential target buy zones to think about based on some key technical levels from late 2025. For the stable giants like Lockheed and Northrop, the game is patience. You wait for the price to dip to you. And for the really volatile growers like Palantir and Kratos, the goal is to never chase a rally. You have to wait for those inevitable pullbacks to get in. Now, we absolutely have to be realistic here and talk about the risks, because this is not a sure thing. First, those high-growth stocks are priced for perfection. Any piece of bad news, any missed earnings report, and they could get absolutely crushed. Second, supply chains are a huge issue. If you can't get rocket motors or computer chips, you can't deliver your product. And finally, there's always politics. A budget showdown in Washington, D.C. could freeze up new contracts in a heartbeat.
And here's our quick but very important reminder. Everything we've talked about today is for informational purposes only. It is not financial advice. Please do your own research and consult with a professional before making any investment decisions.
So we'll end with this thought. This huge transformation to autonomous warfare isn't a question of if anymore. It's happening right now, and it's moving fast. It is completely reshaping who holds power in the world, and it's creating an entirely new class of industrial leaders. So the only question you need to ask is this: will your portfolio be ready for it?
Please subscribe, like, and share ValueVest Daily for learning totally unbiased daily opportunities before you put your money to work. Hey, one more thing. Please leave a comment if you want us to deep dive into any specific 2 ticker symbols to compare.